On June 15th, 2022, the chair of the Federal Reserve, Jerome Powell, gave a speech. No one cared about that speech, no one paid attention, but that speech will affect everyone. Everyone in the world will be affected by Jerome Powell's decision, especially those who live in the United States or Europe or, like myself, in Canada. And that speech was heavy, it was boring, full of technical terms, and it sounded like an economic mumbo-jumbo.
The tightening in financial conditions that we've seen in recent months should continue to temper growth and help bring demand into better balance with supply.
I am a boring economist. For me, the more boring, the better. And I'm gonna make Jerome Powell's speech easy for you. I will translate his speech from a financial jargon into a normal human language.
Good afternoon. I will begin with one overarching message. We at the Fed understand the hardship that high inflation is causing. The labor market is extremely tight.
Tight labor market. In economics, we don't have such a thing as a tight market or loose market. Tight, loose, what does it even mean?
Labor demand is very strong, while labor supply remains subdued.
Aha! Now he's talking about supply and demand on the labor market, so we can apply economics to understand what he means.
Supply and demand conditions in the labor market to come into better balance.
A better balance. Better than what? A balance between supply and demand means that supply intersects demand. Economists call such an intersection point in equilibrium. Jerome Powell calls it a balance. Sure, why not? What brings the labor supply and the labor demand into balance? It's a wage, a market wage.
To come into better balance.
A better balance on the labor market means a better equilibrium wage. What Jerome Powell is really saying is wages are too high, and high wages cause high inflation. But he can't say that. He can't say wages are too high, Americans make too much money, and corporations should cut wages and make America poor again. Then everybody would be boo, boo. So instead he said, labor market is tight, very innocent, nothing to see here. And by the way, it is not true. Wages don't cause inflation because prices are rising faster than wages. Wages fall behind, which means that Americans become poorer and poorer.
And inflation is much too high.
In the US, the current inflation rate is 8.6%. Is it high or low? The current target for inflation is 2%. So if you calculate the difference between the current inflation and the target inflation, you will get 330%. So the US Federal Reserve is missing its target by 330%. The US Federal Reserve is failing this much.
Today, the Federal Open Market Committee raised its policy interest rate by 0.75 percentage point.
This line was the most important line in the entire speech. The entire global financial world was waiting for this decision. So what does this mean? What does the policy interest rate mean? In the US, it's called the federal funds rate. And it's the rate at which banks lend each other money. It's a free market interest rate. It's set by supply and demand on the market of loans between banks. But the US Federal Reserve has a target for this rate. And the US Federal Reserve conducts operations. It buys and sells bonds. It buys and sells currency to hit that target. So this target, the target for the federal funds rate, is a benchmark. It's a foundation for all interest rates in the US and in the whole world. And the US Federal Reserve raises the target by 0.75%. When a central bank raises its policy rate, it makes borrowing more expensive. And then people and businesses will borrow less money. And if they borrow less, they will spend less. And if people and businesses spend less, prices can't go up. And when prices stop going up, inflation falls.
From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting.
Here, Jerome Powell promises that at the next meeting, the Fed will increase the policy rate by 0.5% or 0.75%.
We will, however, make our decisions meeting by meeting,
Or maybe they won't do that.
and will continue to communicate our thinking as clearly as we can.
But he just said he will or will not increase the policy rate. Is that as clear as he can?
And no one knows with any certainty where the economy will be a year or more from now.
So for 40 minutes, Jerome Powell was giving predictions about the economy. And now he's saying that those predictions don't mean a thing.
Inflation has obviously surprised to the upside over the past year, and further surprises could be in store.
So inflation is surprisingly high, and it will get surprisingly higher in the future.
And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain time.
So these are uncertain times, but Jerome Powell will try to avoid uncertainty. That was Jerome Powell's speech. Let's now ask. So the Fed raised the key interest rate, the federal fund rate. Is this the right thing to do? A resounding yes. Will this decision be enough to control inflation? A resounding no. Is this the right time to increase the interest rate? No, it should have been done long time ago. Will the Fed be successful in controlling inflation? No. In the United States, inflation started in January 2021. Joe Biden took office and inflation took off. And for the entire year, the chair of the Federal Reserve, Jerome Powell, did nothing, absolutely nothing to control inflation. For the entire year, prices were rising, President Biden was spending, and Jerome Powell sat back and enjoyed the show. This book claims that for a plane crash, it takes 7 consecutive human mistakes. Jerome Powell is not a pilot, but Jerome Powell made not 7, but 12 mistakes, when every month he did not increase the policy rate. Every month he kept the policy rate at 0%. And now, surprise, surprise, there is high inflation. And only now Jerome Powell is waking up to reality. In March, the Fed raised its policy rate by a teeny 0.25%. In May, they raised the rate by a lousy 0.5%. And in June by 0.75%. That is too little, too late. And that is why it is the Fed that failed. If the US central banker Jerome Powell fails to control inflation, what about Joe Biden? Will President Biden rush to the rescue and fix everything? What is President Biden doing to control inflation? Nothing? That will be the topic of my next video, so subscribe and stay tuned for more videos.